Greg, Woodard stocks are up 5% so far in October after the S&P fell 7% in September. So do we trust this bounce, or is this a bear trap?
Nothing suggests to us that the market cycle's over. The indicators suggest to us that while we're moving later in the economic cycle, certainly equities still look fairly attractive. We think you have to be a little bit more selective in terms of finding good names 8 years into a bull market, but certainly none of the indicators suggest that a bear market is on the near-term horizon, and we would use volatility to really upgrade your portfolio, look for companies where fundamentals or improvements in fundamentals are not directly tied to the economy. So we think this is a constructive environment to operate in.
All right, let's talk about earnings. A few companies have come out so far. I know we're still early in the process, but we've heard from some of the big banks. Goldman missed, JPMorgan missed, Bank of America did better. What's your view of the financial sector right here?
If you look at the financial sector, it tends to be the most economically sensitive. So given our view that you're going to have muted economic growth, we have some concerns in the financial sector. Add to that, some of the regulatory constraints in that sector. We're seeing opportunities elsewhere.
All right. Another theme we've been hearing, although it's early, is that China continues to slow and it's weighing on multinational sales. We heard that from Yum. We've heard it from Nestle. Will China and slowing China be the theme of earnings this year?
It could certainly be the theme, but I think if you look at some of the trends in China, certainly you're seeing lower growth, but we think it could be more healthy growth. So you're seeing a shift away from an export-led economy to a more consumption-driven economy. So again, we think you have to be selective. You have to look at themes related to healthcare consumption, overall middle-class consumption. And if you stick to those themes, we think you can be successful if you have a relatively long-term horizon.
Let's talk a little bit more about healthcare. Healthcare, the S&P was down 10% in the third quarter. So healthcare, which was a leader all year, really got smacked in Q3. What's your outlook for 2016 for healthcare?
If you look at the healthcare sector, I think you have to dissect it a little bit. If you look at some of the volatility that we've seen, it's been largely in some of the biotech and some of the higher growth areas. We think some of the pharmaceutical areas are attractive. We also like some of the life science and tools areas. So again, we think you have to be very selective. You can't look at it and paint it with a broad brush, but really find some of those long-term secular trends and stay away from some of the high growth areas where you've seen valuations stretched a bit.
And then finally, you mentioned China before, so let's talk a little about what's going on in China now. Would you put money to work in China? Everyone's worried about the slowdown. Are there opportunities there, though?
We think there's a lot of opportunities. Again, you look at the developing economies in general, you're looking at growth rates that are twice what you can find in the developed markets. So we think you have to be selective. We think you have to look for those long-term secular trends. We like technology. We like the healthcare sector in China. And we think you have to stay away from some of the commodity complex areas that really are more leveraged to some of that export growth and that export-driven economy that we think is shifting to more of a consumption-based economy.
All right. Thanks a lot, Greg.
You're very welcome.
And thank you for watching The Street.